My name is MK Hansen. By day, I am a senior global systems integration architect and engineer, a policy analyst and research consultant, and forensic data analyst. I'm also a renter, tenant advocate, data activist, and co-director of CPAW, the Coalition to Prioritize, Protect, and Preserve Affordable Housing. We're here today to talk about the residential infill project. As with most things related to the affordable housing crisis and land use regulations, there's a lot to unpack, and we don't have the time. And even if we did have the time, I know that everyone's eyes would glaze over after about an hour, regardless of how fascinating talking about Florida area ratios and setbacks may be. So we're going to cover some of the surface, and I invite you to investigate further for yourselves with those things that resonate. My informed opinion is that unless this sort of broad strokes upzoning is explicitly tethered to strong anti-displacement mandates, HUD standard affordability requirements, and environmental protections, it will accelerate, exacerbate, and perpetuate the crisis of affordability by fueling gentrification rather than mitigating it. Recent studies from MIT, the Lincoln Institute of Land Policy, and others also agree with that premise. And 4 of the members of the Planning and Sustainability Commission recently voted to oppose RIP specifically because of increased displacement risk. But the final vote was 5-4, and so here we are. So in order for you to come to your own informed conclusions about whether this is something that you will ultimately support or object to when the proposal comes before City Council later this summer or fall, it's important that we all understand the larger context of the past, where we're at in the present, and how that informs our choices for shaping the future. So let's start in the past. In 1999, the firewall between speculative finance and traditional commercial lending was removed with the repeal of Glass-Steagall. This turned what had been a relatively boring housing market where supply and demand behaved kind of like a playground teeter-totter into a fully fledged casino with all the attendant machinations that allowed Wall Street to hedge its bets so that it won at a modest rate even when other people were winning at the table, but cleaned up exponentially when everyone else was losing their shirts. Mortgage-backed securities turned housing into a bona fide commodity where those debts were financialized, bundled together, and traded in the private and public bond market. Credit default swaps and other devices resulted in a rapid inflation of the housing market, a massive bubble of conjured wealth. A pool of, say, $50 million in investment could conjure $1 billion in fictitious value just through synthetic trades, side bets and side bets on those side bets. Housing was no longer being built because there was a demand from people who wanted and needed to live in them, but as rapidly appreciating investment vehicles. Speculative investment capital creates its own form of market demand, a demand that requires even more market rate supply to satisfy its appetite for high-yield commodities, rather than housing built for its social utility. Remember that. So we all know how that played out. Speculative investors walked away from their loans and defaulted en masse when there was no greater fool to sell those mortgages to at the top of the market. Hundreds of thousands of new homes with no buyers to service that debt. Rapacious, predatory, and fraudulent lending practices became prevalent in order to keep stuffing mortgages into those overvalued bonds to conceal the fact that the speculative house of cards was in deep jeopardy. African American communities were targeted more aggressively for those predatory adjustable rate mortgages, even when they qualified for more secure loans. At the height of the rapacious lending boom, nearly 50% of all loans given to African American families were deemed subprime. The New York Times described these contracts as a financial time bomb. The economy collapsed. Millions of people lost their homes when the banks, struggling to cover their bets after toxicity spread through the whole financial market, called in their loans, lowered credit limits, froze credit, and some folded. Even more lost their homes due to predatory loans. Both homeowners and renters living in foreclosed homes were evicted on an unprecedented scale. And private equity Wall Street giants like Blackstone, the world's largest private equity corporation and now Wall Street's biggest landlord, were there to buy up all those foreclosed homes at a deep discount and turn them into rental properties, especially opportunistic since millions of new renters were created out of that disaster. Since 2007, the foreclosure crisis has displaced at least 10 million people from more than 4 million homes across the country, the equivalent of the population of Michigan. Then in 2012, Blackstone created yet another new financial instrument, rent-backed mortgage securities. And gee whiz, the housing construction market and real estate industry began a rapid recovery. Interest rates were still artificially low and banks were lending again. And along with that speculative investment rebound, double-digit rent increases nationwide and the rapid proliferation of new, expensive, securitized multifamily housing debt. Here in Portland, we began to see the rise of an unprecedented demolition epidemic. Here in a city that doesn't restrict the demolition of sound, habitable housing in 97% of the city. For-profit developers gobbled up the low-hanging fruit of inexpensive housing, demolished them, and replaced them with brand new construction priced way beyond what first-time home buyers and average residents could afford. Renters in some areas, myself included, received as much as 70% rent increases in just 5 years. Another speculators came along buying up existing below-market units and immediately evicting existing low-income tenants and raising the rents to market. In 2015, the crisis became so acute that tenant advocates declared a renter SOS, and the city of Portland declared a housing state of emergency. Right here in the Portland metro area, in just the last 3.25 years, large corporate institutional investors have bought and sold over $5.8 billion in existing multifamily housing, almost 27,000 units at an average cost of only around $190,000 per unit. Compare that to the nearly $350,000 to $450,000 per unit cost that the Portland Housing Bureau and other subsidized affordable housing projects are spending to house a fraction of those being displaced by speculative multifamily investors. Like trying to catch the tsunami of displacement and economic violence in a paper cup. And here we are today, in the midst of another eviction epidemic and speculative housing market bubble, or a continuation of the first, depending on how you look at it. The vast majority of Portland area new rental units, about 84%, are market rate and what the industry calls luxury 4 and 5 star, priced way beyond what most residents can afford. And to say that there's a glut of market rate supply would be a monumental understatement. And none of it has provided any relief to cost-burdened renters. The homeless population continues to rise, and displacement of low-income families and communities of color continues unabated. So let's talk about the premises and promises of the residential infill project. That through land use deregulation and allowing lots to be redeveloped into market-rate multifamily housing, the invisible hand of the market will provide affordability and inclusion without the need for that increased development opportunity to be tethered explicitly to pesky, protective, regulatory countermeasures that keep people housed, protect the environment, and mandate HUD standard affordability. So let's talk about the kind of housing that we actually need, the housing that does serve social utility and not speculative investment. This is what affordability with a capital A looks like. Housing needs, constraints, and cost burden defined by the HUD standard of affordability, which is percentage of median family income. This is very important to understand when we're talking about real affordability rather than relative to whatever the market will bear. There are far more people in need of housing below 60% of median family income than those who can afford to buy or rent at the top of the market, above 120% MFI. The problem is, there is no housing crisis. There is only an affordable housing crisis. New construction is surpassing the need for market rate housing and woefully failing to meet the need for lower income supply. In fact, Portland is in a state of hyper supply, with tens of thousands of luxury market rate units sitting vacant, while an increasing number of people are being displaced, forced to live in their cars, or worse. The housing supply has been inverted by a market rate housing boom. And a surplus of market rate housing does not trickle down, overflow, or filter into affordable housing. In fact, it can take up to 30 years for those units to attain some semblance of affordability long after they've lost their luster, while displacement, homelessness, and suffering happens in real time without the luxury of waiting it out. So let's talk about the root cause. Which came first, the shortage of affordable supply or the erasure of it through double-digit rent increases, no-cause evictions, and demolition of existing naturally affordable housing? Displacement caused by speculative real estate investment and gentrification are the cause of the lack of affordable housing supply. When prices are raised to whatever the market will bear and demolition of affordable housing is unrestricted, lower income families are priced out, and that affordable supply no longer exists. Meanwhile, the housing market bubble is yielding exorbitant rates of return for investors. Add to that rent-backed mortgage securities and the fact that Wall Street private equity giants like Blackstone are also in the landlord business, from single-family rentals all the way to high-rises. Suffice to say, tenants with large corporate or Wall Street landlords have higher rents, more fees, more frequent rent increases, and remarkably higher eviction rates, all of which drives profit and shareholder dividends. Let this sink in for a moment. A speculative real estate gold rush happening simultaneous to a crisis of affordable housing. To imply that one has no relation to the other, and that the current crisis is somehow caused by the benign pre-existing condition of low supply, rather than the avarice of an overinflated market, is not only incorrect, it's disingenuous and dangerously misleading. Legislation which brings broad and dramatic change should be certain that it understands the root cause first. Otherwise, it is particularly vulnerable to erring on the side of irrevocable harm and regret, rather than careful consideration and concern. If the real name for the affordable housing crisis is displacement, then the real name for displacement is injustice. An equitable solution understands the root cause, mitigates displacement, and mandates affordability to relieve the crisis rather than exacerbating and perpetuating it. A balance of regulations, incentives, and demolition review is a solution that takes inverted supply and shapes it back into an envelope that meets the goal of providing housing for all income levels and requiring, rather than merely requesting and hoping, that development meets needed housing and affordability goals. The residential infill project claims to be an affordable housing supply bill, yet it would weaken land use regulations citywide without any mandate of affordability. In fact, it would incentivize more displacement and demolition of existing affordable supply by allowing even more market rate density, and therefore exponential densification of profit. This solution doesn't look much like a remedy. In fact, it looks just like the problem, only worse. How can the assertions of those who ride the supply-side free market bandwagon be true? That so-called NIMBYism is not only the biggest barrier to creating affordable housing, but also the cause of the crisis, when the erasure of existing affordable housing supply is unfettered, unregulated, and unprecedented. That sort of misdirection and misappropriation poisons the well and strangles constructive debate from the outset and vilifies those who want to stop the hemorrhaging rather than those who profit from it. Renters like me, and people of color in particular, are suffering and powerless to stop the evisceration of our communities and the displacement of our friends and families. These efforts are sales pitches to further deregulate an industry that already exploits the commodification of a basic need by manufacturing a shortage. It is imperative that we adopt change that addresses the root cause rather than fueling it. These are some examples of the kinds of infill units we can expect. With citywide upzoning, developers can more easily mass produce these cheaply built but expensive to rent or own housing types without being subject to the zoning nuances and diversity of the various communities they seek to redevelop. One-size-fits-all policies benefit large corporate developers and landlords who have the capital to undertake multiple simultaneous redevelopment projects citywide. In other cities where similar residential upzoning measures have been passed, the most significant outcome was increased pricing across the region with a negligible increase in net units. What this tells us is that upzoning increases the value of the dirt, but that doesn't necessarily translate into providing communities with the housing they need, nor does it deliver on the campaign promises of significant additional units. Unless required to do otherwise, developers and investors will continue to buy at a bargain and replace with what is most profitable by building to the maximum allowed envelope, whatever returns the widest profit margin. Believing that industry will instead voluntarily forego the profit motive and fiduciary duty to corporate investors in favor of adorable, ticklish, and affordable units out of a moral obligation or sense of goodwill is, unfortunately, absurd. Wouldn't it be great, though, if everything was different? It's my belief that it's possible to get closer to that vision of the future through a systems approach and a combination of regulation, incentives, and reviews, but not by deregulation and wishful thinking, and certainly not by following false narratives. This is the RIP overlay, about 96% of the city. This is what one-size-fits-all policy looks like. The premise is that all current residential zoning is exclusionary and that it keeps out lower-income families, and that upzoning will allow the construction of multifamily housing that is relatively more affordable and provide more diverse housing options. However, the RIP overlay includes areas that already contain existing dense, naturally affordable housing of all types. Renters who lease single-family homes in the RIP overlay are especially vulnerable to increased displacement risk. If their lots are upzoned, since the speculative value of the land will instantly render what's built on top of it of no value compared to the profit potential of a new development. And since RIP is not tethered to any demolition restrictions or affordability mandates, a developer will build whatever is most profitable on that lot, and the displaced renter will have even fewer, if any, options of where to go next and still keep their lives intact. I should also mention that even though the Oregon legislature recently passed statewide rent increase caps, all existing construction 15 years or younger is exempt, and all new construction is exempt for 15 years after receiving an occupancy permit. Let that sink in. This is the area surrounding Lentz. All those red dots are non-owner occupied single-family homes, the most vulnerable to redevelopment and displacement. There are links to interactive maps in the description of this video. I invite you to look around throughout the city in those maps for yourself to see just where the RIP overlay intersects with low-income communities and vulnerable renters. In closing, I'd like to leave you with a few clips from Planning and Sustainability Commissioner Andre Bao. He voted against the RIP proposal and has been adamant about the displacement risks, particularly for low-income renters, African Americans, and communities of color. Please visit this website to be directed to a playlist of other clips on the subject of RIP displacement, and decide for yourself whether RIP is the cute gift its cheerleaders purport it to be, or whether it will accelerate harm.
You're asking me, as an African American, to approve displacing African Americans that can't come back. I get redlining. Redlining was I couldn't live in Portland in this section of town, and I could live across the tracks. Now I can't even live in Portland anymore. I just can't approve that. I can't, in all consciousness, say that people in the city of color are not going to be able to live in certain parts of the city and are going to be displaced, and they can't even come back to the city unless there's just not a market for them. We in Portland have taken on disparities, hate, crimes, a lot of things, and said one is too many, but today as a planning commission, we are not willing to go there. Institutional racism is defined as racial discrimination that has become established as a normal behavior of society. This is becoming normal behavior for us as this bureau to say, we're okay with displacement, and we're going to try to find mitigation that is not funded today, that we can't get to these people. The numbers are just not there to get to that amount of people. We have factors that we're putting in place that other policies are going to come before us today and say, it's okay because we did it at RIP, we can do it in other policies. We should be saying, how do we limit or restrict? We don't have to do it in all the city. We do not have to place RIP in all the city. We can place it in the places where it fixes that overflow problem and reduces the values in these outer neighborhoods, in the blue areas, and that is a viable alternative. But we're willing to go ahead and say we have this greater good. The greater good is not good if there's a loss. And we can say it's better than the comp plan. Well, saying something's better than something that's bad is not a rational decision to me. We have just taken this RIP and made it an arrow of displacement for minorities in the single-family dwelling homes. We're going to just to say that they're going to move into, Latinos are going to move into a $1,600 unit. You look at the experience in Northeast Portland and the discrimination and the racism and all the things of trying to get people to stay in those neighborhoods with a lot of money. It was very hard and not successful all the time. And now you're going to go out and society hasn't changed that much and you're going to try to do it again. We're hoping for a whole lot, and we're asking people to trust that this equity policy and our trust in the Housing Bureau and our trust that council is going to change their policies is going to help them protect these people. To me, we've taken the equity lens and blindfolded that person or that idea so they can't see this displacement. We've gagged her so she can't cry out and say this is wrong, and we've covered her ears so she can't hear the pleas of the people we're going to displace. We really have just gagged and covered up equity, and we're going to move forward with the policy of there's a greater good, and this greater good is setting a precedent that is uncomfortable for me. It just is uncomfortable to say there's a greater good and people will get hurt.